Options trading. You've heard the term, right? It's one of those things that just sounds complicated, something reserved for Wall Street pros. But what if I told you we could explain the whole thing using something as simple as concert tickets? Seriously, let's see how a sold-out show can actually unlock the secrets of options. All right, first things first, we have to tackle the biggest myth about options trading, this idea that it's some kind of financial wizardry that only geniuses can understand. I bet this quote right here feels pretty familiar. You picture this high-stress, crazy tech world, and it's easy to think, yeah, that's not for me. And you know what? That's a totally fair reaction. But here's the thing. If you strip away all that confusing jargon, at the end of the day, an option is just a tool. That's it. It's not a magic trick. It's not some secret Wall Street code. It's a tool designed for a specific job. And just like any tool, once you get what it's for, it becomes a whole lot less intimidating. So, to really get a handle on this tool, we're going to use an analogy that makes everything just click. So forget about stocks and finance for a second. Let's talk about getting tickets to a huge concert. Okay, imagine this. There's a new band playing a show next year, and you have a gut feeling they are about to blow up. Now, instead of buying a pricey ticket right now, you pay a small, non-refundable booking fee to lock in today's price. Fast forward a few months, and you were right. The band is a global superstar, and tickets are impossible to find. So here's the magic. You don't even have to buy the ticket yourself. You just sell your reservation, your right to buy at that old super cheap price, to someone else for a massive profit. And here is the absolute best part of this whole deal. What if you were wrong? What if the band never got famous? Well, you just let your reservation expire. The only thing you're out is that small booking fee you paid up front. That's it. Your maximum risk was known from the very beginning. Okay, so you've got the concert ticket idea down, right? It makes sense. Now let's just swap out the concert terms for the real deal trading terms. I promise it's not a big leap. So in the world of options, you've basically got two flavors. A call option is our concert ticket example. It gives you the right to buy a stock at a certain price because you're betting that its value is going to go up. A put option is just the opposite. It gives you the right to sell a stock at a certain price. You'd use this when you think the price is about to go down. It's kind of like buying insurance on your ticket in case you think the concert might get canceled. And you remember that little booking fee we talked about? Well, in options trading, that's called the premium. And this is probably the most important part. That premium is the absolute most money you can possibly lose on the deal. Your risk is capped right from the start. Okay, so we know what options are, but why on earth do people actually use them? Well, it usually comes down to two totally different strategies. You can either use them like a slingshot or like an insurance policy. So the first strategy is speculation. This is the slingshot. Think about it. You're using a tiny bit of effort, or in this case, a small premium, to launch something much, much bigger. You get to control a large amount of stock for a tiny fraction of the cost, aiming for those huge, amplified returns. That's exactly what we did with our concert ticket reservation. The other strategy is called hedging, and it's the total opposite of the slingshot. This is your insurance policy. Let's say you already own a bunch of stock in a company, but you're getting nervous that the price might take a nosedive. You can buy a put option to protect yourself. That way, if the stock price does fall, the money you make on your option helps cancel out the losses on your stock. It's a purely defensive move. So, we've talked about the power of options, and we've talked about the different ways to use them. But now we have to talk about the catch. The single biggest risk that separates an option from a regular old stock. See, you can hold a stock pretty much forever if you want to. But an option? Nope. Every single options contract has a ticking clock. It comes with an expiration date, and when time's up, the game is over. This means that with options, it's not enough to just be right about which way a stock is going to move. You have to be right about when. So, what happens if your timing is off? The answer is simple, and honestly, it's pretty brutal. If the stock doesn't make the move you predicted before that expiration date hits, your option, your concert ticket reservation, expires and becomes completely worthless. Poof. It doesn't matter if the stock soars the very next day. If you're out of time, you are out of luck. So let's break it down. To make money with options, two things have to happen. First, your prediction about the stock's direction has to be right, and second, your timing has to be right. If you get either one of those wrong, you don't just lose a little bit, you lose the entire premium. That booking fee is gone for good. So there it is. Options can be an insurance policy to protect what you already own,
Or they can be a slingshot for some high-stakes speculation. It's a really powerful tool, but it's a tool with a ticking clock. The only question left is, how would you use it?